The Nasdaq dips nearly 2% in a tech-led sell-off on Wall Street as Treasury yields hit their highest level since April of 2024. The S&P 500 too slides over 1%, while the Dow corrects about 0.5%. Stocks in the Asia-Pacific are largely lower following a weak handover from Wall Street. The GIFT Nifty is also suggesting a lower start for our own markets. Brent crude rises above $77 a barrel now on expectations of tighter supply and higher demand from China. Gold prices have paired gains as Treasury yields rise in the US and the US dollar strengthens as well. The government projects GDP growth for this fiscal at 6.4% in its first advance estimates. This is the slowest pace of growth in 4 years. Manufacturing is likely to see the sharpest slowdown. And the upcoming budget is likely to focus on the depreciating rupee, supply-side risks from global geopolitical tensions, and the impact of inflation, among other factors. Sources say that measures like direct cash transfer and tax breaks are also likely to be on the cards. That is a CNBC TV 18 exclusive. Good morning. Midweek is here. So is the earnings season. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I'm Hormas Patakia. Let's first take a look at how the Asian markets are faring. And contrary to what the handover was from the Wall Street, it is a pretty steady looking picture, if you could say that, because the Hang Seng is down 0.3%. So is the Taiwanese index. The Nikkei is down around 0.6%. But the Shanghai Composite trading just below the flat line. In fact, the South Korean markets are even trading in the green. They're trading with gains of around 0.8% right now. So not as bad as feared for the Asian markets, considering the sell-off that we saw on Wall Street last night. We'll pull up the GIFT Nifty as well, and that will give you a similar picture. As of now, it was around about 70 points a few minutes earlier. That has improved to a 25-point downtick is what the implied open is suggesting as of now for our own market. So we may open below the flat line, but not as bad as the Wall Street handover was. And speaking of Wall Street, Tuesday's trading session was a red session because strong economic data raised questions about the possibility of the US Fed cutting rates later this year. Now, the Dow fell almost close to 200 points. The S&P 500 fell over 1%, but it was the Nasdaq that was the big underperformer, shedding nearly 400 points in yesterday's trading session. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes in Tuesday's session after better than expected economic data on services renewed concerns about inflation remaining too high. The Dow falling 178 points. The S&P 500 was down 66, while the tech-heavy Nasdaq retreated 375 points. Big changes are coming to Facebook and Instagram. CEO Mark Zuckerberg announcing today that Meta is ending its current third-party fact-checking program in the U.S. and will instead begin moving to a community notes program similar to the one on Elon Musk's platform X. Meta says it will also be moving the trust and safety teams that write the policies and review content out of California into Texas and other U.S. locations. The company says it will now take a more personalized approach to political content so that people who want to see more of it in their feeds can do so. The announcement comes amid continual criticism of the platform by President-elect Trump, who praised the move in a press conference today. During that same press conference, the president-elect announced $20 billion in foreign investment to build data centers across the country. Emirati billionaire Hussein Sajwani is pledging at least that amount, according to Mr. Trump. This is the second high-profile announcement of foreign investment recently after SoftBank CEO Masa Son pledged last month to invest $100 billion in the U.S. and create 100,000 jobs over the next 4 years. That's what's happening here in the U.S. Back over to you in Mumbai.
And staying with Wall Street now, let us also listen in to Amy Wu Silverman of RBC Capital Markets, who gives her outlook for the equity markets in 2025.
One of the big themes everyone keeps talking about is we need to see a market breadth widening. But, you know, we're still suffering through the same paddling duck market. I like to call it that because it looks smooth and calm on the surface, right? But you've gotten these huge violent rotations, maybe down in healthcare, up in financials. And so that index level volatility continues to look calm. Your VIX isn't really signaling much, but you throw Donald Trump into the mix and the changes in fiscal policy. And I think that dispersion is going to really impact the market.
That's all the global market action that we have, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the setup on the F&O side of things as well. First up, Vinny joins in to get all the market cues we need to watch out for. Vinny, good morning. How's the setup looking like this morning after that slight bounce that we saw yesterday?
So as of now, Urmas, good morning first. And what we're seeing in terms of an opening, Nifty implied indicating a muted start. But yesterday, do not forget, of those days, highest point is what the Nifty closed at. It was a very range-bound, a narrow range that the Nifty was trading in. And it actually closed just slightly above the 23,700 mark. Though 100 points off the day's highest point, Nifty Bank, both of them were still below the 200-day moving average. So it'll be key to watch out for, how the market actually starts moving today. Broader markets, though, outperformed the benchmark indices, so interesting to watch out for there. Now, yesterday, obviously, we saw a lot of individual movers in terms of news flows coming in or brokerage notes coming in. In terms of top performers, we had ONGC, that was in focus, Biocon, IndiaMart, Intermesh, and life insurance companies yesterday were buzzing in trade. So SBI Life and HDFC Life was something that saw some bit of a momentum coming in. Other than that, in terms of drags, we had Trent. The IT stocks were down and out, so HCL Tech, TCS was also under pressure. While in terms of Zomato, on the back of brokerage note, Blue Star also on the back of brokerage note, saw a decline. So today, how these stocks perform will be key to watch out for. Other than that, keep an eye out on the FOMC minutes that will be coming out this evening. That will be important. Advanced GDP estimates in the domestic market for financial year 2025, that's come out. So that is going to be a key factor for the markets to keep an eye out on. FIIs continue to be sellers. Maybe that bit of an impact that we could see, as well as IT stocks will start being in focus as well. Yesterday they were in focus. Today also they'll continue to be in focus, as tomorrow we'll see earnings coming out ahead of the IT earnings on 9th of Jan starting tomorrow. So keep an eye out of that. Nifty implied open, muted start.
Interesting. Vinny, thanks a lot for that. Over to Abhishek now, who would list out the stocks that you need to keep an eye out for today. Abhishek, good morning. What's on your list?
Good morning, Omas. To begin with, Berger Paints has issued clarification with CNBC TV18's report of, the companies looking to buy Akzo Nobel's India stake. So Berger Paints says that at present there is no material event information or development in this matter. However, Akzo Nobel has issued clarification on report of portfolio review by the holding company or the promoter or the parent company. They say that they have not received any specific information or communication from the parent company, and they would not like to or they are not in a position to ascertain the correctness of the said news item, but they have not denied it. Dr. Reddy, their arm has signed agreement with Jaguar Labs Holdings to sell manufacturing facility in their Louisiana, USA. CESE, they have issued a letter of agreement to their arm for setting up 150 megawatt of wind solar hybrid power project. LOA also has a green shoe option of an additional 150 megawatt of wind solar hybrid power projects. Now M&M has announced price for top variants of BE6 and XEV90. BE6 pack that's been priced at 26.9 lakh per vehicle, and XEV90 has been priced at 30.5 lakh per vehicle. Tata Steel, they have given Q3 update. India production is up 6.2% YOY, and India deliveries is up 8.5% on a YOY basis. Soba has also given a Q3 update that total sales value is down close to 29% YOY, but it's up 17.8% on a sequential basis. Average price realization is up 16.5% YOY and about 7.8% sequentially. Now, Ola Electric will be in focus. Ola Electric has said that the Karnataka High Court has granted an extension of 6 weeks for the company to submit the response to CCPA. So they had moved High Court with respect to getting a relief from giving additional documents to CCPA. However, this relief has been refused, and Karnataka High Court has given them a strict timeline of 6 weeks to submit the documents. Now, SEBI has also issued administrative warning to Ola Electric. Ola did make an announcement of fourfold expansion to exchanges at 1:30 p.m. while its chairman wrote on Twitter or X at about 10 a.m. So over there, SEBI has issued them a serious observation. Back to you.
Abhishek, thanks a lot for that. Keep Ola Electric and all of these other names on your radar as well. Lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. There's an unconvincing bounce yesterday, if you could call it that. But what's the F&O data indicating today?
Well, the thing that was convincing about the bounce yesterday, that it did not fall. So that was a good thing. We were out of danger, but perhaps not out of the woods, is what the move was. There was consolidation. The street liked that consolidation, especially after the big fall that we saw in the previous trading session as well. So the Nifty Bank and the mid-cap index, all of them ended in the green in the order of which, bulls like, where the mid-caps outperformed, the Nifty Bank led the gain as well. But for the Nifty itself, it was a fairly range-bound session, one could call that, around 150 points between the high and the low. But cash market flows as well. Nothing too much to write home about. The FIs sold about 1,500 crores, DIs bought about 1,600 crores. And the interesting part was that in index futures, the FIs net sold about 35 crores, but they went long on Nifty Bank. They bought about 300 crores worth Nifty Bank futures and sold 368 crores versus Nifty futures. So that's an interesting trend out there. They added about 9,600 longs and 8,000 shorts. The shorts were added on Nifty, longs were added on Nifty Bank, and the net contracts at around minus 2.2 lakh with long exposure of 20%, slightly higher than yesterday's exposure of 18% itself. What is it that the street is hoping for right now? They are hoping for some sort of consolidation, congestion at the higher level. 24,000 call writers are fairly active, 23,800 call writers also fairly active, telling you that there could be some congestion between 23,900 and 24,000 itself. But at the lower level, there is support around that 23,600 mark itself. The only way to determine whether this breakout sustains or not is if both the Nifty as well as the Nifty Bank go ahead and cross past their 200-day moving averages. So the Nifty is placed at 23,915. For the Nifty Bank, 50,706. A lot of stocks on our radar. Yesterday we had pointed out the possibility of Bandhan Bank going into F&O ban. It has gone into F&O ban, and 6 new stocks, cash stocks, will be in focus because come February 1 or Jan 31st, Feb series, we will have all of them trade in F&O. So you have Castrol, Gland Pharma, NBCC, Phoenix Mills, Solar Industries, Torrent Pharma, and this after nearly 40 stocks were added in the previous revision as well. So the F&O universe is expanding.
It's expanding indeed, Mangalam. Thanks a lot for that. Time for a short break. Up next, the government projects the GDP growth for this fiscal at 6.4% in its first advanced estimates. We get you more on this story on the other side. Stay tuned. Welcome back. Now, the government has projected India's GDP growth rate for this fiscal at 6.4% in its first advance estimates. Now, this is the slowest pace of growth in 4 years. Lata Venkatesh joins us to decode the first FY25 GDP estimates for us. Lata.
Yeah, that's right. At 6.4%, the number is a bit disappointing considering that the last official estimate we have is from the Reserve Bank, which is 6.6%. But 6.4% is still better than the 6.3%. Which was the CNBC TV 18 poll. The other positive takeaway is that, in the second quarter, we only got a 5.4% growth. So clearly that's an outlier. The average for the first half, Q1 and Q2 together, was 6%. If the overall year is 6.4%, the arithmetic derivative is that Q3 and Q4, the economy grows at 6.7%. That is also encouraging and indicates economic recovery. A third positive from the numbers is that private final consumption expenditure, which was a mere 4% year ago, last year, FY24, is now estimated at 7.3%, which is very good. Even in the first half, the average works out to about 6.7%. So clearly, the MOSPI estimates that overall private final consumption expenditure is going up. That is a positive. Other important takeaway, agriculture at 3.8%, much better than the about, I think, 1.4% last year. That is, again, a labor-intensive sector, population-intensive sector. If that's grown faster, that means a little more for consumption. The negative is the urban-heavy employment sector, trade, hotels, transport, and communication. That services sector is seen growing at only 5.8% by the MOSPI compared to 6.4% last year. That indicates that urban consumption probably is not going to recover that much. That would be a spot of bother. That's another derivative. That's on the real GDP, 6.4%. Let us look at the nominal GDP, that is GDP unadjusted for inflation. There, the MOSPI estimates that nominal GDP will grow this year by 9.7%. That's a bit lower than what last year's budget assumed. Last year's budget assumed a growth of 10.5% in nominal GDP to 326 lakh crore. What MOSPI is telling us, no, it is only going to become 324.1 lakh crore. So the overall GDP is around 2.2 trillion rupees less than what was estimated by the budget, in which case fiscal deficit, which was 4.9% of the nominal GDP, will have to be lower. It was estimated at 16.1 lakh crore. At the moment, the government will have to ensure that the fiscal deficit doesn't go above 15.8 lakh crore. That's not very difficult, about 35,000 crore less. In any case, the government perhaps is going to spend less on capex, and therefore that will not be very difficult for the government to assume. All told, the numbers are a little of a disappointment compared to the official estimates that we had, but overall there are two positives. Consumption is a little better than it has been last year, or actually much better than what it has been last year, and 6.4 is still better than the 6.3. The next 6.3 that our poll was estimating. Now the scene shifts to the budget. We have to see what the budget estimates in terms of real GDP growth and nominal GDP growth.
Lata, thanks a lot for that. And moving on now to the ongoing JP Associates resolution. Now, sources are telling CNBC TV 18 that a number of asset reconstruction companies have shown interest in acquiring JP Associates' loans in the lender-driven auction. Ritu is joining in with more on this. Ritu, good morning. What are your sources telling you on this?
Good morning, Hormaz. We've been reporting on how the National Asset Reconstruction Company's interest in acquiring Jaiprakash Associates loans from its lenders, has been ongoing. And according to RBI guidelines, banks have to publicly call for counter bids from other prospective buyers under the Swiss challenge method to be able to conclude the sale. Now, we understand at least 6 ARCs have so far shown an interest in bidding for the loan account in an auction which is being conducted by IDBI Capital on behalf of the consortium of lenders. So you have the likes of JM Financial ARC, Phoenix ARC, Arcel and Eka that are among those that have shown an interest in acquiring this loan. The due diligence process, we understand, is currently on, and the auction via this Swiss challenge process is now going to be held on the 14th of January to select the highest suitor, with that 12,000 crores offered by NARCL as the reserve price. NARCL, as the suitor, of course, will be allowed to match or better the highest offer that is received under this auction. Now, interestingly, while NARCL's 12,000 crore offer is under your standard 1585 method of sale to ARCs, where banks get 15% as upfront cash and 85% in the form of security receipts, we understand that lenders have now invited counter offers in an all-cash deal from prospective suitors. So we'll have to see whether that dampens any interest, or what kind of final offers do come in. Keep in mind, the resolution of this company has been stuck for more than 7 years. It was finally admitted for the insolvency and bankruptcy proceedings in June of last year. It is facing claims of more than 52,000 crores from 22 lenders. And while that process runs in parallel, the company has been facing litigation-related delays, which is why lenders are losing patience and therefore looking to offload the asset to an ARC.
Ritu, thanks a lot for that update. 7 years. It's been a long wait for JP Associates and its resolution. Time for a short break. Up next, we get to cues from the commodity side. Stay tuned. We'll be right back. Welcome back. Now, Meta CEO Mark Zuckerberg announced a series of major changes to the company's policies and practices, citing a shifting political and social landscape and a desire to embrace free speech. Let us listen in to Mark Zuckerberg talking about the changes made in the fact-checking program.
We've reached a point where it's just too many mistakes and too much censorship. The recent elections also feel like a cultural tipping point towards once again prioritizing speech. So we're going to get back to our roots and focus on reducing mistakes, simplifying our policies, and restoring free expression on our platforms.
Manisha Gupta now joins in with cues from the commodities side. Manisha, good morning. The crude oil prices are back on the upswing. What are you picking up this morning?
Oh, well, absolutely. And good strength continuing into crude oil prices. I mean, we've started 2025 on a very strong note. And from where we are trading right now at above $77 a barrel, it is a 3-month highs for the crude oil prices. Well, the street is concerned about decline in U.S. inventories for a 4th straight week. There is tight global supplies. And then escalating Western sanctions on Russia and Iran is yet another thing that the street is bothered about. Adding to that, you have Saudi Arabia now raising prices for Asia for the first time in 3 months also tells you that the demand continues strong for many of these Asian counterparts as well. Not just crude oil prices, we've seen metals continue to do well as well. The bit of a pullback in US dollar index and treasuries really has supported copper prices trading at a multi-week highs. Gold is back above 26.50. We have silver prices trading at a 3-week highs as well. Platinum surged to a 7-month highs. So we are looking at across metals, a strong move, and the markets are looking at a second straight weekly gain coming in for many of these.
Manisha, thanks a lot for those updates there from the commodity side. Now, moving on to the updates of the earthquake in Tibet. Now, 126 people have lost their lives and 188 are reported injured from that 7.1 magnitude quake that hit the region yesterday morning. Now, over 3,000 homes in the area were also destroyed. Search and rescue operations remain underway. That's all we have on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for today's trade.